If you look at the headline numbers, you will see the housing market looks quiet. Sales are down, home prices are slightly lower, and inventory is higher. But here's the part where most people miss. And when we break the market down by supply and demand and locations, the story becomes much more interesting. Because what we found out and seeing right now in the market, it's not a collapse. It's something else. It's the pressure. And usually pressure creates different outcomes depending on where you are in the market right now. So today in this video, I will walk you through the February numbers step by step and try to understand what actually is happening in the GTA area. My name is Ilham Ibrahim. I'm a real estate agent here in the GTA area. And this channel is dedicated to one simple goal: helping people to get a dose of clarity before they make their big decision of buying or selling. Because the real estate decision, it's big decision and it's emotional and it's so hard to undo. In this channel, usually I post videos to provide you with real data, real context, and real explanations, so you can see the big picture before you make the most important financial decision in your life. Buying or selling a property is never about the property itself. It's about timing, it's about economics, and it's about understanding the market that you are stepping into. So if you want to understand the market, the housing market in the GTA, you are in the right place. And I highly appreciate if you subscribe to my channel. Let's start with the big picture, because the overall numbers already telling us a story. In February 2026, across the GTA, we had 3,868 homes were sold, and we had 19,314 active listings. And the average home price in the GTA area for the month of February, it was $1,008,968. And months of inventory, it was almost 5 months, 4.99. Now let's pause that for a second, because those four numbers tells us almost everything about the housing market in the GTA area. Sales are down compared to last year, 2025, and inventory is slightly higher compared to last year, and home prices are slightly lower. And if we put all these four numbers together, you get a balanced market, but leaning a little bit toward buyer market. What we are seeing right now, this is the market looks like when supply grow faster than demand. Let's focus on the key number. The key number among all those four numbers is the months of inventory. Just like I showed you, we have around 5 months of inventory. And that number tells us that we are sitting at a line between balanced market and a buyer market. And these numbers are so different from the market that we saw or witnessed in 2021 and 2022. Back then, the total months of inventory were under 1 month. Today's market is 5 times higher than the market in 21 and 22. So the big shift between the market in 21 and 22 and today's market is not the home prices, is the supply is the big shift. And that would bring us to the next piece of the story. And here's the part where most people underestimate. The real story in 2026 is not the demand. The real story is the supply. Active listing for the month of February 2026, 19,314 homes. And to understand why that matter, we need context. Let's look at the 2023. The active listing were around 9,643, and in 2024, it rose to 11,097. Now in 2026, we are sitting above 19,000 listings. That almost doubled the inventory from just 2 years ago. Think about that for a moment. When inventory doubles, buyers automatically have options. In today's market, buyers have choices. That means more comparison. Buyers compare this house versus the other house. They have more negotiation power. They can negotiate the price, and they have more time to make the decision. This is also showing in another metric, days on the market. The average home in the GTA area now is taking 36 days to sell. A year ago, it was 27 days. And back in the peak area, 21-22, it was often under 2 weeks. So the market has not stopped moving, but the speed of the market has changed. Homes are still selling, they are just taking longer. And that naturally will lead us to the next question. If the supply is rising, what's happening to the demand? Now, this is where the numbers become more nuanced. Demand has not disappeared completely, but it has slowed. The total sales this February were 3,868 transactions. Last year in February, the number was 4,127. And in 2022, during the peak market, February sales were over 9,000. So the demand is clearly lower than the peak year. But here's the interesting part. Sales are still close to the sales it was in 2023 level. That means buyers are still active, but they are just more selective. And why this is happening? Because still in today's market, affordability still matters, still an issue. A lot of people still cannot afford to buy a home, the average price $1 million in the GTA. And when we see the mortgage rate, and it's still higher than what it was in 21 and 22, that changes the behavior of the market, of the housing market. We see every day buyers are taking their time to make the decision, the buying decision. We see buyers compare a lot of properties until they make the final decision, and their negotiation is harder than before. However, they are still entering the market. So when we see the demand slowing slightly, but the supply increase significantly, here where you will see home prices react. Which brings us to the next piece of the puzzle. Home prices, almost everyone watches. The average home price in the GTA area for the month of February 2026 reached to $1,008,968. That about 6.7 lower than last year. But pause here for a second. Because of the home price could be misleading. When we see in the housing market supply rises, that means the mix of homes being sold changes. If the supply contains more condos, more smaller properties, more investor listings, that alone can bring the average home price down, because these type of homes are lower prices than others like detached or luxurious homes. So the key question is not just the average home price, it's the market pressure. And the pressure in this today's market, it's kind of modest. We are seeing home prices are adjusting, but slowly. They are not collapsing and not surging, just adjusting. And this is a typical market when we see the supply is increasing, but the demand still exists. If we really want to understand the price pressure, we need to zoom in to the GTA area, because the GTA area is not just one market. It consists of regions, and each region is behaving slightly different. Before I break down the housing market for each region in the GTA area, I would like to talk about the role of the interest rate in today's market. Let's connect this market, today's housing market in the GTA area, to the big picture of the economy. Because the housing market never moves in isolation. It moves with the interest rate. Let's look at this chart. As the interest rate increased from the year 2022 and onwards, you will see prices began stabilizing and adjusting. Now the rates are starting to ease slightly in the year 25 and 26, and the market are responding slowly. Real estate market does not react overnight. It takes months to react to the change in the interest rate. And usually buyers watches the interest rate closely because it affects their monthly payment. But sellers watches buyers' behavior. Are they buying? Are they waiting? Are they comparing? And we are seeing when borrowing cost is stabilizing, the buyer confidence is returning but slowly. That's why the real estate market does not react suddenly to the change in the interest rate. Let's go back to the GTA market. Like I mentioned before, it's not one market. It's broken down by regions. If the GTA housing market had a heartbeat, it would be probably Toronto. Because what happens here often sets the tone for the entire region. In February 2026, Toronto recorded 1,354 home sales with about 6,700 active listings. That put the city at a roughly 4.96 months of inventory. Pause on that number for a moment, because that is just perfectly balanced market. Not a seller market and not a buyer market. Just balanced. The average price in Toronto is about $989,000, which is down roughly 5% compared to last year. This number tells us Toronto buyers have not disappeared. They are simply becoming more selective. But we see condo buyers are negotiating harder. But detached buyers are taking longer time. From looking at these numbers, we see Toronto housing market is not weak. It's just selective and cautious. When we see cautious buyer, they move, but they move slowly. Mississauga tells us a slightly different story, and in some ways a stronger story. While much of the GTA sales decline this year, in Mississauga City, we are seeing sales are increasing slightly year over year. But that does not mean the market is back hot again, but it does suggest something important. We are seeing now the demand in the city of Mississauga is holding. The average home price in Mississauga is about $953,840, which is only about 4.6 lower than last year. And the market currently sits at just over 5 months of inventory. So we see that Mississauga market is leaning a little bit toward buyer market. And the reason that the demand is still remaining steady, simply because of the location of Mississauga. Because if you look at the map of Mississauga, sits between Toronto employment hubs and western suburbs. And when the buyers cannot afford buying in the Toronto city, their next option automatically is Mississauga. What we are seeing, housing market in Mississauga city, a market that is slowed down, but have not stepped back. Now, Oakville is where the affordability conversation becomes very clear, because the housing market for Oakville operates at a different price point. The average price in Oakville sits around $1.32 million. That is down by 8% compared to last year. And we see the sales activity also dropped about 16% year over year. But here's the more important number is the Oakville currently has about 5.72 months of inventory. But that may not sound dramatic, but for a luxury leaning market does matter, because high-priced homes are always more sensitive to the interest rate, changes in the interest rate than other homes. And why is that? Because a slight change in the home price, it affects the borrowing capacity. And when mortgage cost rises, buyers at higher end simply becomes more cautious, because it affects on their monthly payment and it affects on the borrowing capacity. So when we see the Oakville market, housing market, it's not a collapse, but what we call it rate sensitive. So the higher the home price bracket, the buyer becomes more cautious because borrowing becomes more expensive. Durham region might be the quiet surprise in the GTA numbers this year, because while home prices are declining slightly, we see actually the inventory in Durham region tighter than other regions. The average price is around $835,000, down about 7.3% year over year, and sales also declined roughly around 18%. But here's the key number. Durham has about 3.63 months of inventory, the lowest inventory among all GTA regions. Pause on that for a moment, because that is closer to a seller market than a buyer market. And why this is happening? Because of the affordability. The houses in Durham region more affordable than other regions in the GTA. Durham region is the only region that buyers can find a detached home under $1 million price. And when affordability matters, you will see automatically the demand changes. But still, the housing market in Durham region is not booming, but more affordable. Brampton is another market where affordability and demographic play a major role. The average home price here is about $885,575 for the month of February 2026, which is down by 9.6% year over year. And sales also declined roughly 11%, and the inventory currently sits around 5.12 months. And that places Brampton to what we call it a slightly buyer market. But there is something important is happening underneath the Brampton numbers. Brampton has one of the fastest growing population in the region. The new immigrant families continue to settle in Brampton, and multi-generational household is very common in Brampton, and we see it all the time. The demand for large family homes remain strong in the city of Brampton. As I showed you, the home prices in Brampton have softened a lot. You see the long-term demand drivers in Brampton City remain strong. Now, York region is the most interesting market we see in the GTA, because York region, it sits right at the intersection of suburban demand and higher price point. The average price here in York region around 1.23 million, down about 7.6% year over year. And sales also dropped nearly 20% compared to last year. And the inventory currently sits at roughly 5.76 months, which tells us something important. Buyers who wants to buy in York region have the negotiation power. Over the time, we noticed that buyers who wants to buy in cities like Markham, Richmond Hill, Vaughan, tend to attract move-up buyers. Buyers who wants to upgrade from a condo to a townhome, or from a townhome to detached, they choose York region to buy in that area. We also notice when interest rate rises, the buyers in York region, they become more cautious because it costs, and they take longer to sell their existing home in York region, which means the homeowners in York region, they wait longer before they buy their next home. The housing market in York region is not weak for sure, but it paused between two decisions. It's stuck between selling their existing home and buying the next one. Now, when we put all those regions together, you will start to see the real shape of the GTA area. Some areas are balanced, and some areas, like I showed you, leaning toward buyer market, and some areas are still tighter than expected, which should bring us to the bigger question. The bigger question is, what role are interest rates playing in all those regions? Because the housing market, it does not move in isolation. It moves with the cost of money. So what does that actually mean for buyers and sellers who are interested to buy and sell in the GTA area? Let's start with the sellers. Sellers, this market, today's market, is not the market in 2021. You need to price your home correctly. And pricing correctly matters more than ever. Because what we are seeing, the homes that are priced realistically are selling, and the homes that are priced optimistically are sitting in the market. Now for buyers, this is the most balanced market we have seen in years. So you buyer, you can take advantage of this market. You can take advantage of the options that are available in the market. You can take advantage of the negotiation power, and you can take advantage in the time to make the decision. Here's a big takeaway from February housing market. This market is not crashing, and it's not booming either. It's a market that is rebalancing. Yes, supply is rising, and the demand is steady but cautious, and home prices are adjusting itself gradually. And when we zoomed in the neighborhood levels, region levels, cities levels, you saw that some markets are slow and some markets are balanced, and some markets are still competitive. And this is why understanding the micro market is far more important than ever. It's never been one just market. It's thousands of small things that is happening. Thank you for watching, and I hope you like this video, and I'll see you in the next one.